Disposing of a limited company usually involves a considerable amount of forethought, planning and paperwork. A number of possible exit routes exist, and the situation is different for each company. In general, however, the directors usually sell their shares in the company to someone else to run the business, or sell the assets and shut down the company. Once you have decided to close a company or wind it up, there are a number of relationships and obligations which must be terminated. Whether the company is solvent or insolvent, your obligations to customers, suppliers and employees must be finalised. Once the directors have voted to cease trading, closing down a limited company begins with preparing final trading accounts. For corporation tax, when the winding up period begins, the current accounting period comes to an end and a new one begins. From that point on, the company's accounting periods run for periods of 12 months until the winding up is complete. Final accounts will be submitted to HMRC along with the company tax return. HMRC will be advised that these are the final accounts and that the company is to be dissolved. If final liabilities are not paid in full, HMRC may object to dissolution of the company at Companies House. Where shares are disposed of, the sale price is paid directly to the shareholder. If the assets of the company are disposed of, the money is paid to the company and any gain is chargeable to corporation tax. Further tax may be payable when the money is subsequently extracted. This effective double charge to tax on gains arising in companies where the money is extracted by shareholders has been mitigated over the years by the following: business asset disposal relief for shareholders in computing their gains on the shares, the relatively recent reductions in the standard rate of capital gains tax to 18% and now 10% for basic rate taxpayers, and indexation relief available up to the 31st of December 2017 and frozen from that date. If the vendors are individuals and they want to receive the sale price personally, a simple sale of the shares in the company is generally likely to result in a lower tax liability than a sale of the company's assets, followed by a distribution to the shareholders. Business asset disposal relief was formerly known as entrepreneurs' relief. It may be available to individuals who dispose of shares in their personal company. There is a lifetime limit on the amount of business asset disposal relief available to an individual. The lifetime limit is currently £1 million. Gains on the disposal of qualifying shares within the lifetime allowance are taxed at the rate of 10%. Gains in excess of this limit are charged at 20%. To qualify, both of the following must apply for at least 2 years up to the date the shares are sold. Firstly, the individual is an employee or office holder of the company or one in the same group. And secondly, the company's main activities are in trading, rather than non-trading activities like investment, or it's the holding company of a trading group. There are also additional rules depending on whether or not the shares are from an enterprise management incentive. If the shares are not from an enterprise management incentive, for at least 2 years before the sale of the shares, the business must be a personal company. This means that the individual has at least 5% of both the shares and voting rights. They must also be entitled to at least 5% of either profits that are available for distribution and assets on winding up the company, or disposal proceeds if the company is sold. If the number of shares held falls below 5% because the company has issued more shares, the individual may still be able to claim business asset disposal relief. Early planning and preparation will be the key to a successful exit strategy. In some cases, the disposals may be phased gradually over a number of years. Seeking professional advice when thinking about disposing of a business is always recommended. If you'd like to know any more, please get in touch with us. I hope that's useful. If you'd like to see more videos where we answer lots of questions on tax and accounts, take a look at our YouTube channel. You can also subscribe for more videos.